Super. All right. Well, I will go ahead and kick things off. For those of you who don't know, this is John Kennedy, and I want to welcome everyone to our latest business update. Obviously, we have a lot happening as always, and we put out a press release this morning with some of the summary information. Doug, could you flip to the disclaimer slide, please? So as always, we just want to point out that this update contains certain statements that are forward-looking regarding the company's goals and objectives. Please take time to read the full disclaimer when you have a chance, and note that we're recording this update, and the update as well as the presentation materials will be posted on the Investors tab of our website as soon as possible after this update. So with that, I'm going to go ahead and turn it over to James Hickman, our Executive Chairman.
Great. Thanks, John. Can you guys hear me okay?
Yep.
Okay, perfect. So listen, I think the best place for us to get started is where we left off. So we try and do these things periodically and provide everybody an update about where we are as a business. The last time we did this was about 3 months ago. 3 months ago, where we left off was we told you guys a number of things. The business was, we felt like, in the best shape it had ever been in. And frankly, we feel like things are even better now. We're really excited and we want to explain to you where we are. So let's start where we left off. Where we left off is we said, look, our chip design is complete and we have taped out. Basically, we have shipped our chip design off to the manufacturer, to Taiwan Semiconductor. And that was, at that point, we said that is literally the single most important milestone in the history of this business. We also said that we're moving to the NASDAQ. We told you that we had signed a term sheet for $100 million, up to $100 million in long-term funding from a very sort of prominent Wall Street group. And lastly, where we left it last time was that we had opened up a private placement. And the private placement was to provide, raise near-term tactical funding, essentially to bring the chip out of production, to begin the sales ramp, to pay for the uplist, and of course, basic working capital needs for a business like ours to go forward. Unfortunately, the funding in that private placement was insufficient, and it left the company in an extremely tight cash position. So the board made a strategic decision, and the strategic decision was to conserve cash. And that strategic decision to conserve cash also included a pause on the chip manufacturing. Now, the idea that I think we talked about this last time is that the direct manufacturing costs for the chip were already actually prepaid. The tooling and the mask sets and those sorts of things were actually already prepaid. But the idea was that because of the private placement funding was insufficient, there wasn't really any funds available for a lot of the other really critical, important things: the packaging, the testing, the sampling, these sorts of things that we wouldn't have been able to really launch that sales ramp and get moving. And so the company made a decision again to just pause everything and focus on that near-term tactical funding. So you can go to the next slide, Doug. And so that was really the executive team's focus, was that near-term tactical funding. And as we went back to a lot of the investors we have relationships with, large investors, institutional investors, funds, go into a lot of people that we have relationships with in New York, strategic investors even, we got essentially similar feedback that we have received ever since we closed the public transaction on TSXV back in 2022, which was, hey guys, we love the company, we love the business, we love the technology, we love the team, we love everything about this, but we can't do the deal with you, we can't make an investment because you're listed on the TSXV. And everybody's conditions sort of always the same. You've got some venture capital groups, for example, they can't invest because we were listed at all. You have other groups, a lot of hedge funds that couldn't make the investment because we're on the TSXV in Canada, and said, hey, we need you to be in the US. And so the idea was either like, hey, we either need you to delist or we need you to uplist. And it was always one of those two. And the conditions are always, people said, look, I'll give you money, I'll make the investment after you uplist, after you delist, one of those two things. And it was, to be frank, very frustrating to be in that position. Obviously, it's not one that we anticipated, the decision to be. TSXV is great, no issues with the TSXV, but it was we've had nothing but great experiences with the people that we dealt with there. But the reality is that it just hasn't delivered to us what we expected. Everything in that decision to go to the TSXV back in 2022 is based on a a real desire to be able to provide liquidity for shareholders. Obviously, when the company made that decision in 2021, financial market conditions were pretty great, pretty generous, and we felt like it could be an excellent opportunity for investors. By the time the transaction closed, obviously financial market conditions had changed materially, and it just wasn't something that the larger institutional strategic investors were interested in doing. And again, we were in this position. They said either uplist or delist. So we finally found an investment company that had a similar condition. They said, "Hey, this is great. Love the company, love the team, love the technology. You got to delist." But in this case, they're willing to put the money up front rather than say, "We'll give you the money after you delist or after you uplist." They said, "We'll give you the money up front." And as we looked at that deal and all the options that were sort of in the air, in the room, or on the table, we realized that that was the right deal for the business, in the best interest of the company, in the best interest of the shareholders, that it was the right size amount for the business. Because the original plan was, as we talked about this in the last call, is we were looking for that private placement to provide near-term tactical funding to get us to the NASDAQ, to provide the essential working capital, to provide the kind of essential CapEx and begin that sales ramp and get us to the NASDAQ. And then once we're on the NASDAQ, we could start tapping that $100 million line of credit that we talked about in the last call to raise more money to get us to profitability. Well, this particular group said, "We'll just give you all that money up front. What do you need to get to profitability? We'll give you all that money up front." And so the management team went back and said, "Here's what we think we need to get to profitability really over the next several months." And so this isn't something that's, what they feel is a long way out. This is something that obviously, as the disclaimer shows, no guarantees of any future results, but this is something that obviously they are anticipating. I think everybody is entitled to know what management is thinking. And so this is the number they came up with. And so the investor group basically put in all that capital up front. And the company feels like that's exactly the right deal for the business and for the shareholders, and really puts the company in a position where finally it has all the resources that it needs, everything it needs to execute and scale, and finally take this business to the next level, which is really that completed design with technology that this team has been working on for a long time and feels like is not just how we feel, but really what the market is telling us. Doug will tell you what the customers are telling us, what the market's saying. We feel is incredibly disruptive, really game-changing technology. We now finally have the funding that we feel is necessary to execute and get the company to profitability. And most importantly is we still have a hell of a team. We have an incredible team. I want to brag about these guys just a little bit. I mean, we're in a position right now where we have to go from essentially 0 units to lots and lots of units per month, millions of dollars in sales and scaling very rapidly. Well, the guy that's done that countless times in his life is our Chief Operating Officer, Thomas Fedorko, who's scaled this so many times and is just really one of the best people we could hope to have. Doug is our head of sales, knows everybody in the business, government, private. I mean, he goes to these conferences. He's one of the most popular guys you could ever hope to see. Ron Vandell, our CEO, I mean, talk about a guy with exactly the skill set. A lot of people don't realize this, don't know this. I mean, Ron used to run a multi-billion-dollar business division within Dell, and a big customer of theirs at the time was a little known hardware startup you might have heard of at the time. This was what, probably 25 years ago. A little company you might have heard of called NVIDIA. And the guy who was the founder of that company, Jensen, Ron's business was such a big customer there, as Jensen used to come and take Ron out to dinner. Okay, so this is the kind of relationships and experience we talked about before. Ron flying out to Cupertino to do deals with Steve Jobs. I mean, this is the kind of veteran leadership that we have in this organization. And so we have this team, we have this veteran leadership, we've got designers, guys like Alex and the whole design team that built something that we feel is truly disruptive, truly game-changing. And we actually now have all the pieces, because when we had this conversation a couple of months ago, we said, great, we have the leadership, we have the technology, but we don't have the funding yet. We have a path to funding, but we still need to raise that near-term tactical funding. And we just didn't get it through the private placement. Now we have it. It's, cash in the bank, money received, and we're actually now, this company is supercharged to be able to get to the next level. And the last thing I'll say before I hand it over to Thomas is, we said that we had paused everything, the manufacturing process. And I want to be clear that the design team wasn't just sitting around twiddling their thumbs. In the meantime, we felt really great about the design that we had shipped off to TSMC back in June. But since we actually had the time, there was a pause in the manufacturing process. Alex and the design team said, hey, let's not waste this time. Let's go back and see what kind of design improvements we can make. And so they actually took the opportunity to make more improvements on design, to add extra things that'll make it even better, even more sellable, additional features, and probably most importantly, some major technological milestones, including probably most importantly, booting Linux onto the chip, which is fantastic for the business, fantastic for the team. And Alex and Doug are going to tell you about that in a little bit. So bottom line is, while we felt really great about where the chip and the business were back in June, the design is in an even better position now, and the business is in an even better position. This is the best position that we've ever been in. And I'm glad to be able to say that in consecutive calls, because that's what you want. You want to be able to constantly have improvement and have that positive momentum. But we have incredibly positive momentum because we have everything that we need now, with great chip, great technology, great team, and funding. And with that, I want to turn it over to our Chief Operating Officer, Thomas Fedorko, who's going to tell us where we go from here. Thomas, thank you.
Yeah, thanks, James. So manufacturing execution in Q1 of next year is going to be critical to our overall success. We need to deliver engineering samples and then pilot production and then roll into early production as seamlessly as possible. That's going to require us to be very crisp and fully aligned with all of our supply chain partners. We've already initiated substrate orders for the Thunderbird engineering builds. The substrate, of course, is a really critical component required in the package and assembly process, and it has the longest lead time in the entire manufacturing cycle, so it's really good to be moving forward on that front. We've reserved the capacities, and we've been allocated all that's required throughout the entire supply chain to ensure that we can meet the aggressive sales forecasts that we have in front of us. The opportunity is there. We need to make sure that we're there to embrace each and every opportunity. We're preparing the automated test capability. You'll hear me in particular, but all of us talking a lot about ATE in the near future. That stands for automated test equipment and represents the hardware and software that comprehensively tests Thunderbird to ensure that it functions within its design specifications prior to shipping it to customers. Once we have it tested, then we anticipate that these early engineering lots will be adequate to yield devices necessary to support our early access customers. Our design and supply chain partners are fully supportive of both where we are today and are wholly supportive of the vision for where we're going with Thunderbird. Cadence, who is our primary supplier of both our design tools and the majority of the purchased IP, remains fully committed to not only where we are with the 12-nanometer tools, but where we're going, and will provide the ecosystem we need to be successful with Thunderbird 2 at either the 4 or the 3-nanometer node. TSMC has been extremely selective with who they grant access to the leading edge process nodes. Besides the tier 1 semiconductor companies that you read about every day in the news headlines, there are only a small handful of carefully selected customers that they believe have both the technical capability and the right market focus to be on these nodes. In the past month, I'm proud to say that InspireSemi has been granted access to the 3-nanometer node, which is the most advanced manufacturing process node available in the world today. ASE, our OSAT partner, OSAT, our outsourced assembly and test partner, has allocated the capacity in one of their state-of-the-art assembly test facilities in Chongli, Taiwan. This factory delivers the highest quality and the lowest cost on the advanced packaging required by Thunderbird. And IMEC continues to support us incredibly well. They've done the substrate design and continue to help us achieve all of the engineering pilot builds that we're going to need through these factories. InspireSemi continues to attract some of the best and brightest engineers on our team, as James mentioned earlier. I'm pleased to announce that we've added 2 very talented engineers to our team in the last couple of weeks. Mike Green is the initial member of our test engineering team who will be focused on generating that test stimulus for validation and qualification testing. And these are needed to run those AT testers I mentioned earlier. We also added Michael White, who's a very talented senior embedded software engineer who has extensive Linux, real-time operating system, and embedded applications expertise. So we have a supply chain primed and ready to embrace the challenges of a swift ramp from engineering to early production. We have our supply chain and design partners energized to support us, and we have an experienced team that has embraced the vision to make it happen. So with that, I'll hand it over to our CMO, Doug.
You're on mute, Doug.
You're on mute.
Thank you, sir. Thank you very much. In the spirit of what James did last time, I'm going to also say, let people know this is where we left off last time. A quick overview of Thunderbird, especially for some of those who were not there. So these continue to be exactly the right value props that people love. Powerful, fast, versatile, cost-effective, green, energy efficient, those kinds of things are just getting more and more important as we're now seeing people building, Amazon now nuclear power plants next to their big data centers. It's just getting crazy how much power, all these compute accelerators and servers are consuming. So we're going to make a big dent in that by a lower energy efficient, more efficient processor. So straightforward, drops in just like into standard servers, just like other GPUs and other type accelerators, but much more versatile, much easier, and very scalable. So to show an example of some of that impact on what this can mean to our enterprise customers in their total cost of ownership, Thunderbird has over 20 times the amount of CPU cores in it versus the very latest Intel or AMD x86 CPUs. It's actually 24 times as many. And this is the announcement just a week ago from Intel of 128 processor cores in their latest Xeon. So we have on one card over 6,000 cores, custom low power, low area cores per board to really help with that performance and performance per watt energy efficiency level. So literally one Thunderbird card has more CPU cores than an entire rack of these Intel AMD servers. And you can put 8 of these accelerators in a 4U server, which gives you the compute power in one 4U rack unit server of all those racks of servers. That is a massive savings in not just servers and power and air conditioning, but also interconnects, points of failure, real estate. Overall complexity of managing this is so much lower. It's just a win on every level. So this is what the value prop that our customers love. This is how significant and disruptive this is going to be to the market. So as James said, we've come back from a couple conferences. In fact, Thomas and I were at 2 more last week, a TSMC event and the Global Semiconductor Alliance US Executive Forum. But right before that, I was at the HPC-AI User Forum at Argonne National Lab, where a lot of the National Lab people were there, but so were Boeing, the DoD, and some enterprise customers. And then HPC and AI Wall Street, where we also exhibited, and I was on a panel, an analyst panel as well. And what we're hearing over and over is just how our value prop is resonating. This double precision floating point math. One of the analysts in the industry pointed out that they just did their survey this month, and 57%, over half of the software by a good shot, requires 64-bit floating point math. And many of these things can't work on a GPU either. They need an all CPU type architecture, which we uniquely have. We continue to own this. Even generative AI, which is all the talk right now, it's been pointed out by several industry experts that relies on 64-bit floating point math for having good foundation models, as they're calling them, to make Gen AI work reliably and accurately. So this is just kind of amazing. The analyst, by the way, pointed out not only does over half the software require 64-bit, but he had just been at Hot Chips, and every single customer there, new chip architecture presented was strictly AI focused and very low precision. He actually asked one of the customers, "What are you going to do?" And they said, "We're going to buy 64-bit systems. We have to. We have no choice." So here we are. And we continue to find new application areas like we talked about last time with cybersecurity, the win in that space. And then, lastly, I think we're seeing the timing to expand into more AI is looking sooner than our prior projections. So we're going to go after that with Thunderbird 2. So another significant thing that we took advantage of, the design team took advantage of, per James's point, during this interim time, is getting Linux running on the Thunderbird compute accelerator. I cannot tell you how significant this is. No other competing compute accelerator runs Linux, or for that matter, any other standard operating system. And customers love Linux. The HPC industry is all about Linux and open source software. They hate the vendor lock-in that things like NVIDIA CUDA or ROCm from AMD's GPU give you. They want openness and they love Linux. This is what software expects. And this is a very big deal. I was very pleased to be able to talk about this at these last two conferences, and everybody is excited about it. It just provides access to the entire stack. And, customers' biggest investment in the enterprise customers is their software. They expect to buy new hardware every 3 to 5 years. So by giving them Linux and open source software ability, it just further amplifies our value prop. I'll let Alex talk a little more about what this means to the company and our investors.
Thanks, Doug. Obviously, we've done a lot and crossed a lot of significant milestones in the last few months on the technical front, but we're focusing on this one because it's so significant to the company, customers, and investors. Linux is an incredibly complicated piece of software, and being able to run it on our platform is just proof that our system works the way we believe it would and should. There's no bugs, there's no details of the spec we might have missed. And it saves us, as a strategic choice, it saves us a ton of money and time that we would otherwise have to spend developing custom software for this product. Most of the companies that have done similar accelerators for AI, for example, have had to go down that road where they spend years and have hundreds of people working on the software stack to get the customer's applications to work on their accelerator cards. And we don't have to do that because we just run Linux. It's almost as if we were a standalone server that happens to be plugged into another server. You can actually log into our card, type commands, and run programs as if it was just a standard computer. You don't need anything special to use the Thunderbird product. So it's a huge deal for the customer, and it's a huge deal for us that we don't have to develop a custom solution, and a huge deal for both of us, we and the customers, that they don't have to learn this new solution, even if it's easy. No one wants to have to learn a new way of programming things just to use one product. So we avoid that whole obstacle to adoption. Customers can ramp up much faster. They can just compile the software they already have. They can even compile it on our card itself, and thereby be guaranteed that it'll just work because our card knows the software running on our card knows how to compile things to work on itself, obviously, rather than having to cross-compile it on a different system. And as I alluded to earlier, this is a huge verification point. It's really the biggest we could ask for, or that I ever hoped for. Some companies have hundreds of people on their verification teams spending years verifying each part of their design, logic gate by logic gate. And being able to run software as complex as Linux just bypasses that whole requirement for us. It exercises every part of the chip, every part of the spec for this RISC-V ISA, and it all just works. So couldn't be more pleased than to be able to report that. I'll also add that we haven't even found any issues in at least 2 or 3 months with the hardware, and that's also a huge confidence builder.
So I will, this is Ron Vandell. I'll pick it up at where James left it in the beginning on the financing journey, what I call the financing journey. Am I showing or not? I still see Alex on my screen.
No, you are.
You're good. You're good, Ron.
Okay, all right. So kind of telling the same story a little different way in terms of financing. I hope that you've gotten the perspective that both in terms of market fit, market timing, and technology readiness, we're ready to go. And then Thomas talked about we're ready to go fast. We're ready to scale this solution that the market wants very quickly next year. To get there, over several years now, we've raised about $20 million, mostly in incremental rounds that have come from high net worth individuals and a few institutional investors. That is super important to us in our early days, and we greatly appreciate everyone's contributions to getting the company to this point, mostly as individuals. But you really can't do it all that way. You need to diversify and expand your shareholder base to fully fund the company, and we've been constantly looking for how to do that. I often think of the military analogy of if you're doing a campaign, the army marches on its belly, right? If you don't feed the army, you're coming to a stop at some point. In the high tech startup world, the equivalent to that is runway is a beautiful thing, and so having multiple fundraisers that just give you incremental extensions in runway is not the most efficient way to run the company, and it can be frankly a high anxiety time both for our current investors and for the management team to be operating that way. So we looked for, as James said, all kinds of ways to broaden out that shareholder base. We did the public listing on the TSXV, which was a process we started in 2021 that was supposed to be reasonably quick and reasonably good market timing, but for a whole number of reasons, that didn't really yield any material new capital. And as has already been mentioned, time and again, investors with capacity were stymied by our complex structure of being publicly traded, but not publicly traded in the US. So we kept looking for ways to more fully fund the company. We talked about one in our last update, which was basically a uplist partner that would provide long-term funds after we had uplisted, would not provide any near-term funds. And it really just became clear to us, the more we got into that, that strategically that could have worked, but it wasn't really the best timing for the company to try to sprint towards an uplist right now. It also became more clear that there would be some quite significant dilution and third-party costs ultimately in going that route. So if we go to the next slide, we have now locked in on an investor that includes delisting from TSXV, where our shares have really not been liquid anyhow. It does provide all of the capital we need, though, upfront. So it requires the delisting, but doesn't hold the capital back until that's occurred. And that just makes a huge difference to us as a company to keep up our momentum. It does result in the funding we believe gets us to profitability. That, of course, drives huge gains in valuation for our company, even if we're privately held. We believe this has less dilution than the other paths we've explored and very minimal third-party expenses as well. And of course, we preserve all of the options to ultimately become publicly traded in the US when that's the right time for this company so that we maximize our momentum and maximize our shareholder value. So as Andy, our company counsel, will talk about next, there's some pretty important key attributes of this funding. The first one is that it is an unsecured loan ahead of the delisting and the conversion. So we get the essential capital now, we get total proceeds up front, and it is sized to be what we believe we need to reach profitability targeted for middle of next year. There is further capacity, even with this investor, but it's only if we need it. It's not a huge block of capital that, if it came in right now, would for sure generate some pretty big jarring changes in overall dilution. So it's essentially just what we need. And we have, as Jack will talk about in a couple more slides, we have sized what we need to be able to take care of what we have to take care of as a company and what we want to do to get to profitability on a timely basis. Very reasonable valuation, as you'll see, considering our current trading price. Other terms are attractive. The only conditionality is delisting itself, which the company wants and believes is in the best interest of shareholders anyhow. And with that, I'll turn it over to Andy.
Thanks, Ron, and hi, everyone. So I'm just going to run initially through some of the major points of the recently closed financing. So this is a 10 million Canadian dollar deal. And the original intent here was to negotiate an equity deal. So that was really what the investor wanted. Obviously, they were keen on the listing and for all the reasons that Ron's explained. And obviously, they wanted that equity deal. So we had to structure the financing initially as an unsecured loan to meet TSXV requirements. That also allowed us to receive all the funds up front, which was important to allow us to get working on all the stuff the guys have spoken about previously. So at the moment, this is an unsecured loan, but the intention is that it will be an equity investment in future. So just to deal with the terms of the loan very initially, ostensibly it's repayable 12 months from the date we agreed it. So that would be September 23rd, 2025. And it has an interest rate of 10% per annum, and that's compounded monthly. But it's important to remember that the loan structure goes away if the company delists from the venture exchange. So that means certain things. On a delisting, all that interest would be forgiven. So there is no interest payable if we delist. The principal, the $10 million, is automatically converted to a unit. The unit consists of one share and one warrant, and the effective price is 13.5 cents. So although this investor, you'll see in some of the disclosure that it prices at $13.50. That would be for the proportionate voting shares, which are worth 100 times our subordinate or our common voting shares. So, the effective price would be 13.5 cents. The warrant that is attached to that, it's also exercisable at an effective price of 13.5 cents. And that has a term of 5 years. Now, it's not a term of 5 years from issuance of the warrant. It's a term of 5 years from the date we originally agreed this. So again, that kind of evidences that this is always intended to be an equity deal, right? And the loan is simply there until we're able, if we can, to achieve a delist. It's important the investor has been granted some additional rights that's important to go through. Firstly, they have the right to appoint or nominate one board member. And this right exists whilst they have a 5% equity share in the company. So that person also, the company needs to nominate them for election at every subsequent shareholder meeting while the investor holds that equity percentage. Obviously still subject to shareholder approval for the appointment of that director at every shareholder meeting as usual. In addition, they have the right to appoint an observer to the board. So this is a non-voting person that they're entitled to be at the board meetings, participate, see board documents, but they don't have a vote. So it's one board member with a vote and one observer without a vote. The second additional right is an ongoing preemptive right to maintain their percentage in the company. So what this means is if Inspire does financings in the future, the investor has the right to participate in those financings up to an amount that allows them to maintain their percentage at the date the financing's announced. And again, that right lasts while they have a 5% equity stake in the company or more. The final additional right, I just want to point out, is a right of first refusal. So this was something the investor wanted because they wanted to be able to ensure that Inspire had sufficient capital to get to cash flow positive. We think it's a show of support in the company, obviously. And this right only exists until Inspire is EBITDA positive for 1 month, as shown on financial statements and calculations from those financial statements. And the right of first refusal is if Inspire does need, and we don't think we are going to need at the moment, we think the money already received is sufficient for us to get to cash flow positive. But if we need additional money, we can request that from the investor, and they have the first right to provide those funds. And they would be on the same terms as the conversion that we spoke about above. So it would be a unit, 1 share, 1 warrant, effective price 13.5 cents, and the warrant exercisable at 13.5 for 5 years. So it would be on the same terms. If we request additional funds and they don't want to provide them, Inspire is obviously free to then search for those funds elsewhere at the same terms or worse terms than that. So it doesn't preclude us from raising funds elsewhere if the investor doesn't want to contribute those additional funds. This is a very important part of the deal. It does contain a penalty clause. So the penalty clause is that if the company does not delist by January 31 of next year, so January 31, 2025, the loan, all accrued interest and an additional penalty of 25% of the principal, so that would be $2.5 million Canadian, would become immediately due. So the company would have to pay that back to the investor at that time. So, obviously the investor wants the delisting. The company's explained its reasons for thinking that it is beneficial at this time. And this penalty clause really gives the investor comfort that the company is going to move towards that and make its best efforts to make that happen. And it's also the reason why it is so important, and we're encouraging shareholders to vote to approve the delist at the shareholders meeting. So next slide, Doug, please. So just to talk about the delist a little bit more, how that's going to go, the process for that, etc. So the first and main thing that we need to have here is a shareholder meeting and obtain shareholder approval for the delist. We've called that shareholder meeting, or we plan to call it, for November 20th of this year. The meeting's going to most likely be held in Austin, Texas, at the company's offices, and it will be an in-person meeting. So that means that there won't be any, online video access, but of course, registered shareholders are entitled to attend the meeting if they wish. It is going to be an annual general and special meeting because we are required to hold an AGM for the 2024 year, even though we had one fairly recently. That was a delayed AGM for 23. So this will be, an AGM and the additional vote on the delist included with that. So at the moment, we're currently preparing the information circular that gets mailed to shareholders. So that information circular will have all the usual annual general meeting stuff in it, and it will also have further information on the delisting, the reasons for it, and a little bit about the financing as well. So what will happen is the hard copy information circular will be mailed to shareholders on October 30. We're also going to post it on the website on that date, and it will also be posted on the company's profile on the Canadian Securities Disclosure System, which is called SEDAR+. So there'll be a hard copy emailed, and there'll also be online copies available as well. With that package, there are also going to be instructions on how you vote. Usually it's by internet or telephone. And in the instructions, there'll be a code included that you need to use on the internet or on the telephone to make that vote. If you've got any questions, of course, you can contact us about that. Sometimes, unfortunately, I should probably point out, if you live abroad, outside of the US or Canada, or If there's some sort of problem with the postal in your area, you may not receive the hard copy information circular prior to the meeting. So if you don't receive it for the week before the meeting, please do email me at the email address you see on the screen there, ahunter@inspiresemi.com, and I can attempt to have your code emailed to you so you can vote. So as I said previously, we're encouraging all shareholders to vote for the delisting. Just to let you know what happens after if we do have a positive shareholder vote for the delist. The company will make an application with the venture exchange. That application is very simple. It's effectively a letter. It sets out our reasons for requesting the delist. The venture exchange ultimately has discretion as to whether it allows the delisting. So all of this is subject to their approval at this time. We have already spoken with them. We've worked with them on the plan for the financing, and they're aware of our plan to potentially delist. And they haven't expressed any concerns to us at this time about the plan. So we would expect that it will be approved if the shareholders approve it, but obviously at this point it's still subject to their approval. Assuming that the venture exchange does accept the delist, they will publish a bulletin that sets a delisting date for the company. Now that delisting date is usually 10 trading days after the bulletin's published, and that just allows time for any final trades to be concluded prior to the delist. It can be more than 10 trading days if the venture exchange feels that's necessary, but usually it would be 10 trading days. Another important point is that upon delisting from the venture exchange, it doesn't mean that Inspire changes any of its disclosure practices or anything of that nature. It's still effectively a public company. It just doesn't change. We refer to it as a reporting issuer in Canada. So it's still subject to all the relevant securities rules. And we're still have to file all our disclosures. So we'll still be filing financial statements on time, and we'll be making press releases announcing material information as we always have done up till now since we've been listed. So that doesn't change for the company. Next slide, please, Doug. So I just wanted to talk just finally a little bit about how the delist will affect shareholders. What will be the effect on your holdings? What will you have to do? Do you have to take any action? So the most important point to make, first of all, is that obviously once we're delisted from the venture exchange, if that occurs, there won't be any market for the shares, so your broker won't be able to trade them the way that they have been. There will be no facility to do that. There is always a possibility of private sales, and if that were to be a possibility for you in some regard, you would be best to contact us in good time, and we can sort of take you through that process if that needs to happen. Obviously, transfers, etc., of shares to between entities, etc., is still possible. In terms of shares that have been deposited to trading accounts, there isn't any functional reason that they can't stay in an account. The company's still going to have a CUSA BISIN number. It's still going to be eligible for the shares to remain in the CDS system. So they can actually remain in trading accounts. But a lot of this will come down to whether your broker facilitates holding a non-trading company in your account. So your broker will probably get in touch with you if the delisting and when the delisting occurs to let you know if they are not able to hold the shares in a trading account. Usually that would mean the shares will have to be removed from the account and put back into DRS advice certificate form. So that's the digital share certificate that you'd have received when Inspire originally did its deal with Greenfield Acquisition Corp. And that'll be issued by our transfer agent, Odyssey. So the broker will help you do that, if that requires to be done, and Odyssey will then just issue you a DRS, and that will be your effectively share certificate. So it's almost like how you would deposit the shares in your account, but in reverse. Should mention, unfortunately, there probably will be a charge for this, but you should speak to your broker about this because every broker will vary on that. just finally, for anyone who doesn't have shares in brokerage accounts, there's going to be no change here. Odyssey is going to remain our transfer agent. All their processes, everything that's they have had in place whilst we were listed will stay the same. There'll be the same contacts there if you've ever contacted anyone at Odyssey, and the shares will just remain in their book entry system. So nothing's going to change in that regard. And if you haven't deposited your shares to a brokerage account, there's absolutely nothing you need to do after a delist. And that's about all I've got to say. So I'm just going to hand back to John and Jack Cartwright to take us through financial planning for the future.
Super. Thank you, Andy. Appreciate it. Real quickly, on a personal note, you may have seen in the press release that went out earlier today that I'm stepping down as Chief Financial Officer at Inspire Semiconductor, but am joining the board of directors. So I've made a personal decision to relocate back to my hometown in upstate New York and kind of take a turn in my professional career. And I'm actually going on board as a co-head and CFO of a large not-for-profit organization here. So I still firmly believe in all of the great successes we have coming for Inspire Semiconductor, and I'm very thrilled to still be involved as a board member. And also, one other quick personal note, I see many of our great investors that I've worked with over the years on this call. So personally, it's been a pleasure working with all of you. And with that, I will turn it over to Jack Cartwright, who is the new interim Chief Financial Officer for the company. Jack?
Thanks, John. So you've seen so far that the company has done a deep dive across all the functional teams, which has allowed them and us to have a better understanding of the needed steps that we need to take over the next 9 months to get to profitability. Essentially, the uses of the 10 million Canadian are going to go across a number of key strategic areas. And these areas are both strategic, as I said, and tactical in nature that will allow us to make sure we have the specific milestones and steps that Thomas outlined to deliver in early spring, those first units for Doug to sell. Really, what it means next spring is we should have a high margin, high demand product that we can disrupt the universe with, as I like to think about it. Essentially, that leads us to two or three areas that are critical. One is hires. We've already hired 2, as Thomas has alluded to. We have several other critical hires that are really needed to make sure that we can scale this business as we need it to do to hit these markers. And those hires, we're already starting the recruitment process, so they'll be coming in Q4 and into Q1 as we move closer to selling these chips. The other area, as Thomas alluded to, is the capital equipment that we need, the testing equipment to do the validation testing and production, final production pieces to make sure that these first Thunderbird products are ready to go and they work when they are handed to the customers in the spring. Those expenses are significant, but they're critical, and we're obviously prepared to make those investments. The other areas are the balance sheet. We've accumulated a significant amount of AP on our balance sheet as we've been managing cash on a short-term basis. So the company will be winding down and helping reducing some of the liabilities, getting current with many of our vendors, and making sure our relationships with those critical vendors, as Thomas has relayed in his prior conversation here, stay very positive and they still remain invested in Inspire's future. Overall, the company will remain an efficient operating business. It's got a very lean OpEx model. It's got a what will be a flexible manufacturing process, and we do expect to be profitable by the summer or June of 2025. From that point on, it's really about managing the working capital of an expansive, demand-driven sales cycle. So we will be working hard this fall to create the business banking relationships to really set us up for success, to make sure that we have the lines of credit, et cetera, so that we can continue to support the working capital needs next summer and onward. And overall, I think what you've seen here is a plan and a business and a team that's ready to really drive significant profitability in a market that's demanding our products.
Thank you, Jack. So to wrap it up for everyone here, this is the slide that anybody, including myself, has been hoping we'd be seeing in this journey with this fascinating company. Is after several years as what you would call an R&D startup, where we think we properly targeted the critical aspects of a value proposition that would be a winner in the marketplace. We've now got to the point in that process where the design is complete with multiple levels of frankly quite profound innovation. There's not somebody who's going to go reverse engineer this and catch up with us in our rearview mirror in any time soon. And on the commercial side, as you've heard about before, and as is now coming to fruition, we've got the relationships in place with early adopter end customers and our channel partners that will help us get to market again in a very capital efficient way. And so as James illustrated very well in his opening remarks, we've got the technology, we've got the team, we are right where the market should be for what we can deliver. And now with financing in place, we can finally pivot. We can make that pivot from an R&D startup company to scaling a full business. We will deliver the complete solution and disrupt this market. We can scale rapidly as a very high value business, and we'll execute on our roadmap that goes beyond just Thunderbird 1 and will sustain our competitive advantage and not let anyone catch up with what we believe will be a high market share position for years to come. I would just step back and look at what it's taken to get to this point. It started out with a vision of a few people several years ago. More people joined in to support that vision. We've now taken that to the point of it's not a hope, it's not a theory, it is really something that now is down to execution. And every startup there's ever been always wants to get to the point of all that's left is execution. Because if all it is execution, all you need is money. This team knows how to execute. This team has got an amazing pedigree of various kinds of prior winning examples of rapidly scaling businesses. And now we've got the position to do that and the funding to do that. And we are very capable of bringing this company to profitability over the next few quarters, and then just becoming a amazing cash flow generating machine after that. We're thinking in terms of goals like tens of millions of dollars in sales in calendar 2025 and hundreds of millions of dollars in sales in calendar 2026. So anybody on this call or listening to this as a recording can do their own math on what that means for overall enterprise valuation. And being privately traded for a while before we break out and are a very high price earnings growth kind of business just leaves us with all kinds of options about what do we do with public equity markets, what do we do with strategic kinds of transactions. But we'll be in the catbird seat because this team is now poised to only have to deliver, and that's what we know how to do. And I think that's it. We appreciate everybody's support and time.
Yeah, agreed. Thanks so much, everybody. Thanks so much to the team. Thanks so much for all of our investors, John, everybody, and we'll, I'm sure, be in touch soon. I saw there's a couple of questions here in the Q&A. I think Andy and Doug have been addressing these, but obviously don't hesitate to reach out if there's some more questions. So thanks everybody for a great call.
Excellent. Thank you.
Yeah. Take care.